From New York, I'm Bonnie Quinn.
And from London, I'm Guy Johnson. This is Bloomberg Markets. So, Bonnie, the CEO of Total, the French oil giant, says that price volatility and weak demand growth are likely to weigh on markets next year. He spoke to Bloomberg from Abu Dhabi.
$60 per barrel, you know, this country is okay. You know, we produce in Abu Dhabi the lowest cost in terms of barrels of oil, you know, so it's quite low. This is why, by the way, Total is the #1 company. We love this country because it's really a low-cost oil. And so it's so at $60 per barrel, this country has a good atmosphere, even if, of course, you can refer to the fact that the mood in the market is not too good. But here in Abu Dhabi, it's fine.
OK, so you said $60 is sweet. Claudio Descalzi in the seat earlier this morning, he said 64, 65, and we had the Omani saying 60 to 65. So where can we move to on the upside if there's a trade deal, Patrick?
I don't know. I made only mistake when I try to guess on the oil price. By the way, for Total, you know, my break-even after dividend is under $50. So I'm happy. You know, I'm ready to see a price a little down compared to my competitors who dream to have a higher price. I'll be more resilient. No, but I mean, fundamentally, and it's difficult to answer. You know, the volatility in the oil price. Look to the last 12 months or 18 months. It's not +4, -5. It's +10 or +15, -15. You know, last year we had an average of $72 per barrel.
But do you think we're going to get that kind of volatility in 2020?
Yeah, we will get the same volatility. I think the market is, you have a very small amount. It can derive very quickly. You know, the demand this year is not too good because of the macroeconomic trends, the trade wars. So we see an impact on the demand, and there is a global feeling. People are a little worried globally, even if financial markets are pushed up by the low interest rates or negative money, you know.
Did trade wars really hit your demand level this year? Did it come through in the numbers?
It's going through the numbers. You know, the increase of demand is revised month after month by the International Energy Agency. It was 1.4 plus 1.4 million barrels of oil per day beginning of the year, plus 1.3, plus 1.2, plus 1 today. I think we'll end under 1 million barrels of oil per day increase of demand because there is less demand because of less economic growth. There is a direct link. So the demand is on that side is a little weak.
So you're not inclined to give me a price on the upside, but where could the floor be for these prices this year? Let's trade that side of the market.
On this side, I think there is an element which has to be taken in account is the OPEC policy, you know, and we know that the OPEC policy is quite clear. I think OPEC countries want to have a price above $60 per barrel. They have made the caps, so they have been very disciplined. Saudi Arabia in particular has a key role. Russia joins the group. So my feeling is that OPEC will react if the price was going under $60 per barrel.
Total CEO Patrick Pouyanné there speaking with Bloomberg's Manus Cranney. Futures in focus now. Bob Iaccino of Path Trading is at the CME. Bob, it's a quiet day, but just give us your outlook for the week.
Well, obviously, we're going to be looking at President Trump's speech tomorrow as a key driver of equities, crude oil, everything futures, really. And then you've got Jerome Powell speaking after that, who will have already heard the president's comments. So it'll be interesting to see those couple of things. From the perspective of crude oil prices, we're starting to get a little bit of a base where it looks like we're going to spend a little bit of time near the upper end of the range. And it's interesting to me because in the last EIA report, you saw that we're about 3% above the 5-year average for inventories on crude oil, about 1% below the 5-year average for inventories on motor gasoline. You look at the refinery utilization rate, which usually around this time of year starts to come out of turnaround and get back above that 90% level. We're not there yet. We actually fell back from 87.7 to 86. So that needs to perk up. Otherwise, that demand on the ground is going to drag prices back to the lower end. But I don't see us getting out of the range.
Thank you, Bob. Thank you so much for joining us today on Veterans Day from Path Trading Partners at the CME. And again, a quiet CME, no bond trading, of course, today. Well, as it is Veterans Day, we see that the President and the First Lady are participating in a wreath